What's going on, everyone? My name is Nicholas Merton here from Datadash, and today is September 9th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to talk about what I really feel is a make or break moment here for Bitcoin over the next couple of days, where we're either going to finally start to charter higher here through our moving averages, or we are going down to a level many may think is unthinkable. I want you guys to stick with me here. I'm going to be providing the essential details, talking about some important points about how we can prepare ourselves if markets start to finally establish a bottom and trend higher. And outside of this, well, we're also going to be talking about the macro environment. There was a huge sell-off in stocks on Friday, and I want to break that down and what that could mean here for crypto. We got a lot to unpack here in today's video, so if you happen to enjoy my rambling, consider dropping a like, and let's go ahead and kick things off. So I want to start here by just diving into price here, guys. We've been pretty consistent over the last couple of months about the fact that the market has been stalling here at the prior all-time highs from back in 2021. And so far, that kind of sideways slope down has been what's been at play. We signified the lower highs that have continued to form the lower lows, the stagnation at long-term moving averages, and now we are down here at 54,800 bucks, down from when we started covering this topic last week, back around 59,000. And again, you guys know, if you've been watching the channel, we've been calling for a continued pullback, the weakness in price. That being said, I'm not here to just be overly negative. What I'm here to do is point out that we may be getting towards the later innings of this correction. So many people are still thinking in the ways of the past. Many people believed, and we were almost close to being convinced, as it is historically true, that when you get up to those prior highs from a prior cycle, that's usually your breakout point. However, since then, there's been stagnation. There's been lots of distribution. We had the Mt. Gox sell side pressure. We've had the German government selling. We've had weakened ETF inflows at this range when we needed them most. And that has left a lot of people really concerned that there may not be an ability for Bitcoin to move higher long term. On the other side of the side here, while we've been kind of skeptical, we've been in cash since back in March, for the most part. But my main thing is that I'm really looking here towards potentially buying into a capitulation event, the actual moment where we might start trending higher, because we're no longer thinking in cycle theory. Cycle theory, whether you believed in expanding cycles, a 4-year cycle, Bitcoin making the same kind of multiples it used to make in the past, I think all of that is going to be tossed out the window. And we're one of the few voices here trying to warn people about that for the past couple of months. And I think the clear stagnation we've had at a prior all-time high is an example of that. Doesn't mean, though, that Bitcoin can't eventually start moving higher. And I really see one of two scenarios here playing out in the more optimistic end. There's obviously the third scenario, where Bitcoin is in what many people might define as a bear market, or a longer period of stagnation, maybe a long mid-cycle correction, similar to that of back in June of 2019, where we pulled back near towards the prior lows of the cycle. I don't know if we're going to go that far. But in the same way that I don't believe that externality, that really kind of far out bearish scenario is going to be at play, I also believe we might be somewhere in between one of these two scenarios that I want to talk about today. First off, I think that there's a chance here that we could be formulating one of our final lows here. And what I mean by that is I think we might be trying to reclaim the prior lows from early July here in early September, very similar alignment within that period of the month at the same price range, and one that is higher than the prior lows that we had back here in August of 2024, again around the same period of time of the month, in the early first week. So this to me looks like we might be setting up for a sort of inverse, a rough inverse head and shoulders pattern, where the bulls can start to reclaim and get back above those prior highs and maybe go up to the 80K, 90K range. I don't know what the catalyst will be. Maybe we have more ETF inflows. Maybe there's some black swan event that goes on in equities, and maybe Bitcoin starts to deviate, or essentially start to work in a separate direction from the broader asset markets. We'll have to see if that plays out. But there's also a more painful scenario that I see equally likely, and that is that if we continue to struggle at our 4-hour moving averages, if we continue to struggle at the 21-day moving average, which mind you is well below the 100-day and 200-day, which is not a good look for the bulls, then we would start to charter down towards capitulative lows at the 200 week. And I know a lot of people would say that that seems already too bearish, that might be too pessimistic, but I want to point out that we've been having consistent lower highs and lower lows, not to mention the acceleration and the rate of those lows has been picking up over time here with each and every pullback. Not to mention, that's exactly, this price range we're highlighting here, the 200-week pocket, is exactly where we set in the ETF corrective lows from back in January. So I would not be surprised if that's generally where we're going to find a potential low in price. Irrespective, even if we don't get an exact play out of these two scenarios, I think we are getting very close to a period of time where peak capitulation is going to be at play if it hasn't already been at play, and it's going to be a time where we can start looking for signals of an uptrend and we can start taking risk on some various plays in the market when no one is willing to, when everyone's getting burnt out, when everyone's getting liquidated, when there's peak capitulation in the market. And I think that also goes here for altcoins as well. We've also got a solid pullback in altcoins, down over 50% from the relative highs, but didn't even come up to the prior all-time highs of November 2021 in other coin market cap. So again, we're starting to get to a range here where I would start getting a little bit optimistic. Not to mention, we take a look at other coin dominance, which is for the past couple weeks holding up here on its long-term multi-year line of support. Since back in 2017, this is an incredibly significant line of support. It could be broken, right? I'm not speaking in absolutes. I'm not saying that this is some golden line of support that can never be broken, but so far, this has been a range where a lot of people are forced out of their positions. They feel that there's no hope, and then they essentially sell, and that's when smart money starts to enter in. They're not buying up here during euphoria. That's when they're distributing and selling, right? So dominance coming down here towards around 9.6% versus where it was back here at 13.6% makes me more optimistic. So long as we're holding on that line, we start trending higher. So again, we're going to be likely taking our risk here in the altcoin market if we're positioned on one of these two. But one of the big things I want to emphasize, guys, is that irrespective if you like Bitcoin, if you like altcoins, and whether or not you're bearish or bullish right now, we want to keep open to the idea that anything can play out. And if we start to see these optimistic scenarios playing out in the market, we need to be positioned properly in order to maximize returns in the market. And one of the big mistakes I see people doing is that they either only trade or invest in Bitcoin, as it's one of the larger players, or they invest directly into one particular altcoin or the broader altcoin market, and they completely negate that there are other ways to get exposure to the broader crypto space. And what I mean by this is essentially crypto equities. If you guys are not keeping an eye on this, if you don't have a brokerage account set up where you can get exposure to these different assets, many of which have outpaced Bitcoin and altcoins, then you might be missing out on one of the best ways to gain exposure to crypto assets, especially as the narrative is around institutionalization of crypto. Great example here, MicroStrategy established a double bottom here in January 2023, up from $14 up to nearly $200 per share at its high, and still here at $114 per share, right? So we're talking more than a 10x here, right, that we saw in the price here over this run up. So that's really good price action. That outpaced the returns of Bitcoin by a long shot. And MicroStrategy is just simply a holding company of Bitcoin. You also have CleanSpark from its capitulative lows here in January 2023, up from $2 here to $23 back here in March, and it's corrected a decent amount now. It's had some capitulation here, now getting an entry point at $8, a lot more favorable than at 22, right? That's just a simple principle. I'm not saying to just go all in. We want to see signs of a reversal playing in. We don't want to try to catch a falling knife, but we are seeing here overall that you're getting some better entry opportunities than say back a couple months ago. And along with that as well, I wanted to spend some time to talk about today's partner for our video, and that is DeFi Technologies. It's a company we've talked about here on the channel before. And they're a project or company in which is focused on tapping into an area of the hottest narrative of crypto, the ETF or ETP market, and they're tailoring towards the altcoin space more particularly. This is a big staple of DeFi Technologies. Now you can obviously see that comparative to all the other crypto stocks, DeFi Technologies has been one of the strongest and most resilient plays. It's still hanging up to where it was back here in November 2021, has barely pulled back here, and there's a good reason for this. The company right now is only valued around $500 million, but it has a really solid means of monetizing because of its ETP product line. So just for a little bit of a background, DeFi Technologies, we've talked about them here on the channel before. They have a couple different business models underneath the umbrella company of DeFi Technologies, but the biggest one that they have is their focus on ETPs. And they provide this through what's known as Valor. It's their Valor Asset Management Program. Now, this is a 100% wholly owned subsidiary of the company. And this is really kind of the cream of the crop of what essentially DeFi Technologies stands out for. Their ETP products are focused in a variety of global markets, and they cover a wide range of different cryptocurrencies, managing over $609 million in assets under management. For a company the size of Valor, in this case, or more specifically DeFi Technologies, this is really huge. And this isn't just a typical Bitcoin ETP alternative. No, they have Bitcoin ETPs, but they have mostly exposure towards a wide range of different altcoins in the market. Now, you all know that for me personally, if we're betting on a broader upswing in the market in Bitcoin, I'm going to be much more interested in altcoins. And the same applies here for DeFi Technologies because they have a really interesting sweet spot. They're one of the biggest ETP product providers for exchange traded products for altcoins. And having such a wide range of projects like Avalanche, Binance Smart Chain or BNB, ADA or Cardano, Chainlink, Core, Engine, Cosmos, ICP, Hedera, Polkadot, Near, Solana, Uni, you name it, like all the major altcoins you can probably think of, or at least a good chunk of them. They have ETP products in a whole range of global markets. And there's a really good thing here, obviously, which is that they can generate fees in all these markets for people who have assets stored in these ETPs for the convenience of being able to own it in a brokerage account, similar to Grayscale back in the early days with GBTC and also their ETP product for Ethereum. But beyond that, there's another thing that a lot of people miss. A lot of these coins are proof of stake. And the yield that is generated on these proof of stake coins is going back to Valor, in this case going back to DeFi Technologies. This allows them to make serious profit margins from simply running these ETP products in the background. And this for me is why I think the stock is one to definitely watch and keep on your radar. If you just look at the financials, you can see from back at the end of 2023 here to the mid part of 2024, they've expanded their assets under management, and the staked assets that are getting that yield from 30 million up to 344 million. So we're talking about more than a 10x here in acceleration. And if you get that broader altcoin cycle where the value of those altcoins are moving up, as well as more interest and inflows in these ETP products, I think you got the perfect storm here for this company to really be a heavyweight player. And I think that's a big reason why, irrespective of whether or not you agree or disagree with me, I think here, this is why the price action has been holding up phenomenally well. So long as there is an opportunity here for markets to kind of hang where they are at these lows or eventually move into an altcoin cycle, it allows for DeFi Technologies to continue accelerating. Now, I'm not here to tell you guys that you need to buy the stock or anything. All I'm saying is keep it on your radar. We wouldn't be having them as a partner here on the channel if we didn't believe in the company and that there is an opportunity here for DeFi Technologies to do well. I think above all in this cycle, if I were to give my personal kind of TA opinion, I think it's going to probably come up here to around the $3 range like we saw back here and over here. But if you really get that full altcoin upswing, if you really get institutional interest in other different types of digital assets, which we're seeing in a slow and steady way when you compare it to the Bitcoin ETP products, it sometimes takes warming up to these different new markets. If you see that, then this thing could really start to charter forward. Again, that's my honest, genuine opinion here. But again, that $3 range might be heavy resistance in the near term. Nonetheless, we still got a way to charter up there. It's at a $500 million valuation, making millions in the last quarter. So I think that there's a good chance here that this could really start to take off in the long run. So keep it on your radar. But again, that comes back here again to the topic we talked about here with MicroStrategy, guys. You can see these equity plays can run up big time during bull markets. They're not to be slept on. And many of them are actual revenue generating companies in their respective space. CleanSpark is one of the big mining companies, MicroStrategy Holding, in this case, DeFi Technologies, an ETP product provider. So don't just focus on speculating on meme coins. Don't just speculate on altcoins, because in many cases, there's so much dilution in that market whereby you may not get the kind of returns you're expecting. You might be happy to get a 2 or 3x on some of these plays, maybe a 3 or 4x if you really capture the right plays. There will be obviously your 10 or 20x's, but they're very far and few and hard to find in a sea of tens of thousands of altcoins. Sometimes crypto equities are going to be your best bet here. So keep an eye on that when it comes to your opportunities in the market. That's just as important as timing the market. Last but not least, I wanted to go ahead and talk about what's going on in global equities right now, because the story of what's going on in global equities could not be more relevant for crypto. Crypto, whether we like it or not, guys, at least according to history, follows equities and is generally tied to a risk-on or risk-off narrative. That is meaning to say that if equities are moving up generally, crypto is going to have a more beneficial environment. The more euphoric equities or asset markets are as a whole, Bitcoin is going to probably be the top performer alongside altcoins, which may do even better. And because they are really on the tail end of risk. Whether people like to see it or not, some people say, oh, being all in Bitcoin is the best thing you can do, and being in equities or in cash is the risky thing to do. Guys, while the returns historically have been great for Bitcoin, Bitcoin has also 70-80% drawdowns. So it really depends on when you're building those positions and timing that position, right? And again, if you're believing that, we're going to go to 500K like Plan B and all these other people, with all due respect, I agree to disagree. I think at the end of the day, there's a chance maybe Bitcoin could go to that one day. I don't believe it's going to go there in the next year or two like he's calling for. What I'm here to say, though, and just be level-headed here, is we've already struggled for the past couple of months. Well, equities, mind you, since back in March, have continued to charter higher here. They went up well over 10% during that period of time as Bitcoin was stalling. We've seen very clearly here on Friday another smackdown in the S&P 500, and not just in the S&P 500, but we also saw it in the NASDAQ, down 2.5% here. We are well below those prior highs, about 2,000 points in the NASDAQ from back in mid-July during the summer, during the kind of peak of the AI craze, and now markets are cooling down, expectations are weakening a bit, and obviously a lot of this is driven by the weakness in NVIDIA. We obviously came up here just to kind of zoom out here towards the long-term line of resistance. We've been pointing that out for months, and we've had some distribution and chop during this range. Jensen Huang, the CEO, has started an automatic stock selling program that just runs on autopilot, selling millions of dollars of shares on practically every open market day, if not the majority. And we can see here a clear pattern of lower highs here. Now, we saw another 4% move here down in NVIDIA, but it's not just NVIDIA this time around. Last time, on the previous sell-off we saw back early last week, that was heavily due to NVIDIA pulling back. But NVIDIA only pulled back about 4% this time. What we've seen is a broad market correction this time around. We saw Google or Alphabet down 4%, one of its biggest downward days here since back here in July. We also had Microsoft down about 1.6%. We had Amazon in this case down about 3.65%. Tesla down 8.45%, completely filling the gap here and taking us back down to where we were back about a month ago. And this is all coming at a time when the money supply, global M2, our measurement here, this is an exclusive metric we share within the Dash report. Global M2 is expanding. Right? So we are seeing now a weakening in the dollar, yet equities are not performing very well, right? If you want to just take a look at US M2, right, while it's not expanding rapidly, right, we are starting to uptick here since back in February, and we're expanding by a couple 10 billion each month. So this is really not good to see that essentially equities are not reacting. There's not enough velocity in the increase of the money supply like we saw back here, where month over month you were seeing hundreds of billions of dollars, if not upwards of $1 trillion in a single month in injected liquidity. So it's a very different environment here. We're just coming back into what I would define as normalization of M2 when it comes to the money supply in the United States. And what we might be seeing here is a broader correction in our expectations of how euphoric the AI mania is going to get, how euphoric markets should be in response to the technology potential of AI here in the near term. We might have seen markets, as they typically do, overprice the optimism around these technologies. And we're really just a couple points away from where we were back in March here in NVIDIA. So when you're seeing a market leader like NVIDIA no longer outpace the S&P 500 on a routine basis, or for example the NASDAQ, which you can do through these custom ratios on TradingView, just dividing the actual stock by the indices, you'll see very clearly here signs, warning signs, that assets as a whole may be ready to pull back. And I don't think, if I were to give you guys my honest opinion, while there is a chance here maybe Bitcoin holds, let's just see how it does. If you can get above that 21-day from this low range, then I might start getting a little bit excited. Maybe we're seeing a kind of divergence and performance, if you will, between assets where, in this case, equities, where stocks are moving down and crypto starts moving up. Maybe we see that. But more likely than not, if I'm giving you my honest opinion, I think that kind of Max Payne scenario here, down to the 200 week, which is just coming up here perfectly, right around 40K, I think that that's where you're going to find your low. I think that there's a chance that that could come. It might wick in a very short period of time and bounce up, but I think that's where you could see accumulators coming to buy, because the 200 week historically is a very significant indicator. It was serving as resistance for a long period of time. It started to serve as support, and now I think the question is whether or not at a higher range, much higher than where we're back here at 25, 27K, up here at $40,000, can we hold that as support? Right? And again, I go back here to that topic we discussed earlier, the breakdown of cycle theory. And I think, again, a lot of people had their, they were looking through rose-tinted glasses that things were going to always be the same, that this was just like the last few bull markets. And the inflows, let alone new participants in the market, is nowhere near what it was back in prior cycles. Even if you're talking about dollar inflows, right? The ETF inflows have been good, but if you consider stablecoin liquidity injections, the velocity of the money supply last time around, we had a lot more money in the markets versus when we did now, like what we do now, versus valuations. And the acceleration of that money supply, mind you. So just keep that in mind here when we're talking about the potential of a full swing bull market. I think there's a chance Bitcoin could really start to trend up here later this year, maybe in 2025. But we might have to wait until we get that real capitulation before we start to have that shift in inflows. So keep that in mind. Keep those scenarios in there. I don't want to come across as being too bearish. We were just at that price range back here in December and January of 2024. Don't think it's too far-fetched for us to get right back there again for a short while and then start trending higher. That's all I'm going to say here today, guys. I rambled on a good amount. If you happen to enjoy this video, consider dropping a like. If you're interested, again, check out DeFi Technologies down below, as well as a lot of the other plays that we talked about here today. Just keep those on your radar, guys. I think sooner rather than later, we may start seeing some opportunities in the market. I think we're getting in the later innings here of this correction. And while a lot of people are losing hope, we're going to be keeping our eyes to see if price is showing us the signs that accumulators are coming in, the smart money's entering, and then we may have some opportunities to the upside. Thanks so much for tuning in as always, guys. I'll see you guys right back here on Monday next week. Have a great rest of your day, and I'll see you all in the next one. Take care, everyone.